Jane everyone, welcome to my channel. I'm glad to have you all here for today's live session. Alright, today we are going to discuss one of the most important topics in crypto trading. Okay, so today we're going to talk about candlestick chart. So if you do not have a KuCoin exchange your app, okay, the link is already in the description section, and if you can't click the link, let me drop it via the comment section for you guys so that you can download the exchange, sign up, because that's the exchange we are going to use to interpret what we are going to learn today. So give me a minute, I'm coming. I've dropped it on the comment section, so in case you don't have the exchange, so you can download and sign up at once. Alright, let's go back to our topic of the day. Okay, I was trying to say that today we're going to discuss one of the most important topics in crypto trading, the candlestick chart. Okay, so candlesticks here. First of all, what is candlestick? Candlestick tells you the story of price movement. Okay, who is winning between the buyers and the sellers in the crypto market. All right, so let me head over to my KuCoin exchange. All right. Alright, so candlestick tells you the story of price movement, who is winning between the buyers and sellers, and today we are going to also explore what each candle represents, how to read them, and how to apply this knowledge when trading using KuCoin futures. Alright, so I'm going to show you other stuff. So make sure you log in into your KuCoin account. I've dropped my referral link in the comment section, or you can search in my bio. Make sure you click on it and like and subscribe to this channel. Okay, all right, so what are candlesticks? So candle chart, how was candle chart developed? Candle chart were developed by Japanese rice traders hundreds of years ago, and each candlestick shows 4 key data points for a specific time frame. So before we do that, I'm going to introduce you to the Candlestick Bible, because with this book you'll be able to understand how trading started. Okay, how the origin of trading, how the Japanese right traders use these strategies, okay, to trade and be successful in trading. So we go over to, you can go to your Chrome. I have it already. Search for Candlestick Bible. Okay, search for what? Candlestick Bible. I have it already. Yeah, this is where you understand how trading started, the basics. Okay, this is it. This book was invented by Moniisa Omar, the most successful trader in history. Okay, so candlesticks are a reflection of what buyers and sellers are doing in the market. Okay, for example, we know that green represents buyers, red represents sellers. Okay, it tells you a story as what the market is doing and what the market is telling you, basically what buyers and sellers are actually doing. Okay, So that is the most important aspect of this candlesticks. Okay, so we also have in each candlestick there are 4 key points, okay, for a specific time frame. We have the open price, we have the close price, and we also have the highs and the lows. Okay, we have the open price, the close price, the highs and the lows. Okay, so now, okay, the history of candlestick, you can read all this during your leisure time. Candlesticks have been around a lot longer than anything similar in the Western world. The Japanese were looking at charts as far back as the 17th century, whereas the earliest known chart in the US appear in the late 19th century. Rice trading had been established in Japan in 1654. All these are history. Okay, all these are history. Let's go to the main purpose of today. Okay, this is what I mean. This is what I mean by the 4 key data points for a specific time frame. Okay, we have seen this black candle, the one at your left hand. We have seen the real body, we have seen the high, we have seen the low, we have seen the open, and we have seen the close. Okay, this other one also at the right hand, open, high, close and low. Okay, this one is the real body. So now, what does the close and open means? Literally, we know that open price is where the candle started, the close price is when it ends. Okay, the close price is where it ends. So the one at the left hand side is signify buyers, and the one at the right hand side signify seller. So open price here means where the candle started, close price means where it ended, high means the highest price reached, low means the lowest price reached. I hope you are communicating. So let me check in case guys can hear me. Okay, coming. So this is it. If the close is above the open, we can say that the candlestick is bullish. Look at the left candle. Look at the left one. Okay, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlesticks. The most trading platform uses white color to prevent a bullish candlestick, but the color doesn't matter. Okay, you can decide to use red and black, you can decide to use white, anyone. Normally we have the 2 color pairs we normally have is white and black or green and red. Okay, but I love using green and red. Okay, you know that green means good, red means bad. That's how I used to use to differentiate my own. So if the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlesticks, it doesn't matter. But if the close is below the open, okay, if the close is below the open, we can say that the candlestick is bearish, which indicates that the market is falling in this session. Okay, which indicates that the market is falling in this session. Okay, we also have, you can find different colors used to differentiate. That one doesn't matter. Candlesticks have different body size. We have the long versus short. So long bodies refer to strong buying or selling pressure. If there's a long, for example, now if you check chart, if you log in your KuCoin, it means momentum, buying momentum or selling momentum. And any candlestick that is short will not definitely see pressure. Maybe you might analyze your market, you see a buying opportunity, but the candles are small. The money you make, the profit you make from that will be very small compared to someone that is using that they maybe enter the market with a very large. Just imagine this. It's this clanker, right? This clanker. Now if you see the candlesticks now, the candlesticks here, the profit the person will make from here, this one that I've just circled out, okay, you can never compare it to the profit somebody is making from here. You see all these ones. Let me just take it from here. You can't compare it, okay, you can't compare it because this one has a momentum. There's a pressure that the buyers are in control of the market, okay. So even though you can put like $10, okay, and you can make under, in this candle say you can make up to 100x, but with this you can't make such with this one, because this one is very small. Okay, so now let's go back to our trading Bible. What did I do? Let's come back to our trading Bible. I'm coming. So that's what we mean by short and long versus short, okay. And we also have what we call by long shadows, okay, the upper and candlestick shadows, which are called the tails. The upper and lower shadow give us important information about the trading session, okay. Upper shadows signify we are in high session, while lower shadows signify that the session is low, okay. All these ones are long upper shadow, are long lower shadows. So these ones, lower shadow signify the session is low, and upper shadow signify that the session is high, okay. So we also have I've explained the 4 key data points for a specific time frame. We have open price, we have close price, we have highs, and we have the lows. So this will help you in your trading journey, okay. Now we have to go to types of candlesticks. you have to go to types of candlesticks. And before we go into types of candlesticks, the upper and the lower sections, they have significance. Okay, sometimes we call it candlestick wicks, or you call it candlestick shadows. So candlesticks with long wicks, the longer the wicks, the better. These candles shows you how the buyers or sellers try to push price higher or lower but fail, which causes the wick to form. Okay, let me explain that to you using the chart. I'm using Clanker chart to explain this, so just stay with me. Now what just happened here now? If you can see, the buyers here, the wicks are small, and the buyers, this is what I mean. Have you seen this candle? Have you seen this candle? Now this candle, the buyers successfully push the market higher. They try, and it was a success. But they also try pushing the market higher at this point also. At this point, the buyers also tried to push the market higher, but it fell. The sellers also were trying to push the price downward. Okay, that results in the formation of this wick, which is called shadow. That is it. Hope you can see it. So candlesticks with long wicks shows you that the buyers, okay, shows you that the buyers try to push the market higher, but they fail, or the sellers try to push the market lower, but it didn't work. Okay, so that is that. So today we are going to talk about types of candlesticks. We have the momentum or engulfing candlestick. That's how you used to say. You hear the bullish engulfing candle. You also have the bearish engulfing candle. Okay, bullish engulfing candle and the bearish engulfing candle. So I'm going to explain that. The engulfing candle is when the body of the candle is a lot longer than the wicks, and oftentimes they do not even have wicks. Okay, that I mean by engulfing candle. This is a typical example of it. This one, that's a typical example of it. That is a bullish engulfing candle. Hope you can see. That is a typical example of a bullish engulfing candle. Okay, when the body of the candle is a lot larger than the wicks, and often sometimes does not even have wicks. This candlestick shows the strength of the buyers or sellers in control. That one specifically shows the strength of the buyers in control. Okay, so let me look for another example and show you. This is a very typical example of it. Now take a look at this. This is what we mean by bullish engulfing candle. The body of the candle is bigger than the wick. Okay, it's bigger than the shadows. That's why it is that way. Okay, and this candlestick tends to occur. Okay, it tends to occur at resistance and support. Okay, resistance is the highest. I explained that in our last tutorial. The resistance is the highest where the market price reach and it cannot exceed beyond, and support is the lowest where the market reach and you cannot exceed that one. So if for example if for example I choose this as my resistance, okay, the market reach here, and I was very certain that okay, it will not exit that the market will not exit. Let me check. What price is that? When Clanker was at 42.5, it will not exit. That was on 7th September 2025. And if that same price happen and the market reach that same point again, you see it was trading all these days, trading till when? 16th September. Remember, this one took place at when? That was on 9th September 2025. This other one, 16th September 2025. Okay, so 16th September 2025, that same point, market hits that same price. Okay, you can decide to take. That is a very nice entry, that the market will go down. If you have entered this trade with short, see, market let me delete this. See, from that 41, market time to win to 27. That would have been a massive profit. Okay, so I was just trying to explain support and resistance, okay, in futures trading. So that's it. So we're trying to explain the engulfing the bullish engulfing candle. Okay, so I'll be looking for more of them to show you example of it. Okay, let's keep going. All right, I think I've seen bearish engulfing. Okay, it's not a nice example. It's not a nice example. Okay, let me go to 15-minute time frame. Let me check that token. Coming. Okay. All right. Let's check BTC chart. That will be a very nice example. All right. Okay. Yeah. I want to use a very nice example. and explain it to you. I'm coming. Let's go. This is what I'm searching for. This is also an example of bullish engulfing. Okay. Some of these trade need patience. I'm looking for bullish engulfing at either support level or resistance level. That's what I'm trying to figure out. Okay. What's wrong with BTC? This is also a nice. This is also one of the. This is also one of the examples. This is also one of the example. Okay, that took place at a resistance level. This was my resistance. Okay, and the price did what? The price time down from what? 6,000. That's when BTC was almost $70,000 per token. Okay, the price time down to. Have you seen it coming? Price time down. If you would have been patient, the price time down to 58,416. That is still a massive profit for you. So now, understanding the candlestick psychology, as I said, that we have candles are more than just colors. Okay, they reflect trader emotion. For example, a long bullish candle, what does it signify? It signifies a strong buying pressure. That is a strong buying opportunity. And you also have what? A long bearish candle, as the one that just happened now. This is a long bearish candle. Signify what? This long bearish candle signify a strong selling pressure. And there's small candles here. What I mean by small candles, like the one I told you, fade to indecision. Have you seen them? You can hardly decide. You can highly predict that if this market will go up or down using this small market. Okay, using this small. When you see all these small candlesticks, okay, this is indecision stage, and it is very advisable not to take any trade from here. Okay, you don't take trade during decisions. You just wait for an opportunity before you place your trade. You don't trade every day. If you try trading every day, you will definitely not be able to catch up. So that's it. What again? I've explained the bullish engulfing candle for you, and let me use the chart so that you can understand it well. Let me use the Candlestick Bible to explain it to you. I'm coming. This is it. Engulfing. That is page 16. Alright. I will explain that to you. This is the bearish engulfing candle. There's always a smaller body from here. And this other one, a very big candle beside it. Okay. This is the opening. This is the closing. Okay. So this is how a bearish engulfing pattern looks like on your chart. This candlestick pattern gives us a lot of information about the bulls and bears in the market. You see. In the case of bearish engulfing bar, this pattern tells us that sellers are in control of the market. When this pattern occurs at the end of the uptrend, this indicates that buyers are engulfed by sellers, which indicates a trade reversal. See the example. What we mean by trade reversal is, market was trending up from $100 to $200, from $200 to $300, like that. Okay, it was trending. It was in an uptrend. All of a sudden, the buyers were engulfed by the sellers, which shoot out a bearish engulfing candle at the uptrend. That is very close to your resistance. Okay, at the uptrend. From there, it's a nice entry for you to predict that the market will turn down. Okay, that the sellers are in control of the market now. The buyers have to take their leave. Okay, so you must be very careful while doing all this. So let's check something. I want to use Clanker to explain it to you. I think that coin will explain. Okay, if you haven't signed up on your KuCoin app, I'll drop the link in the comment section. Endeavor to do so. So now let's go to trade, search for Clanker. Guys, I missed this. What happened? Why not switch it well? Let me use this one to explain. Have you seen it? Oh. Let's put it this way. These are time frames, okay? And the best time frame for you to use while analyzing your market, when doing your technical analysis, is the 1 hour time frame. Okay, you definitely see the trend of the market, how the market is going. Okay, you definitely see the trend of the market, how the market is going. Now I want to explain the bullish engulfing candle for you guys. Check this chart. Have you seen this? This one took place at the bottom. You see, all these stages was indecision. You can't place a trade here. You see, you can't place it. You can't place your trade here. All these are indecision stage. You can't do anything here. Indecision. You can't do anything. This blue background, okay, this blue line I just drew, blue rectangle, is indecision stage. You can't do anything. Now notice what happened. Have you seen a big engulfing candle, big one, at the resistance level, at the support level, big one? It was being engulfed. The sellers are being engulfed by the buyers, okay, and this gave us an opportunity. My guys took this trade. It pumped from $22 to where? You seen it? That was the trade. To $145 under many days. Let me check. No. Have you seen? That was 23rd October 2025. From $22 to where? Just 3 days. From $23 to $145. Have you seen how many X is that? That was a massive profit because the buyers were in control of the market. And also, you can also have where the sellers, I'm looking for the bearish engulfing candle to explain it. When the market was an uptrend and you see that candle, is a very, very nice opportunity for you to buy whenever you see it. I've used Klanger to explain bullish engulfing for you. I'm looking for opportunity to explain bearish engulfing candle. Okay. Looking for opportunity to explain the bearish engulfing candle. Everything is. Let's look for another token then. Let's look for another token. Let's check Solana. Let's check Solana. Right now, Solana is trading at more than. All right. This is it. Yep. We got it. Okay. This is live. Okay. This is live trading. This is live trading. See it on a 60-minute time frame. There you go. 30 minutes. Let's go to 1 hour. You see the market. This is an uptrend. This is an uptrend. Know the way if it touches 2, know that you don't fall straight line, so just leave it that way. Have you seen it? Now check this particular one. If you are using one hour time frame, you see that this is an opportunity for sellers to enter the market. Okay, this is a great opportunity for sellers to do what? To enter the market. Currently now, Solana is trading at what? 199.83. Okay, 199.83. It is not advisable to use one strategy to trade. Okay, you combine 2 or 3 is okay, but let your analysis not be too much to avoid confusion. You get? Let your analysis not be too much to avoid confusion. Yeah, I can use the bullish momentum engulfing candle and the trend line to enter this trade. Okay, I can use the bullish engulfing candle and the trend line to enter this trade. Already, this is my trend line. Okay, this is my trend line. If the market, because this was an uptrend from where this was an uptrend. It was an uptrend from $177. Okay, it was going higher lows, higher lows to where $205. Okay, so now the sellers have engulfed the buyer. That is why you can see this candle here. You see, this is a bearish engulfing candle, engulfing the buyers, trying to show you that the sellers are currently in control. Okay, you know, I'm not a financial advisor, so you must make your own analysis before you enter the trade. Okay, but I'm telling you, where snipers, okay, can make profit here. So that is the example of a bearish engulfing candle. That is the typical example of a bearish engulfing candle. So let me check. Okay, no question. That is a typical example of a bearish engulfing candle. We also have different. We also have another one. We have a lot. If you can go to that Candlestick Trading Bible, we have Doji, we have Hammer, we have Shooting Star, we have a lot. We have Hammer 8. Okay, but in this course, or maybe course of learning, we'll go through all. By the grace of God, we'll go through all so that you understand when and where and how to use this, like there's no candlestick that is being formed in this chart that does not have its own significance. Okay, all of them have their own benefits and also have their own disadvantages. If you can't use them well, you end up losing trade. That's why it is always advisable you learn before using your real money to trade. And it is not advisable to rely on only one strategy or one tool during trading. Okay, it is not advisable. It is not advisable using one strategy to trade. Okay, so we have seen a lot of candlesticks here, and today we're dealing on the bearish engulfing candle. The bearish engulfing candle. This is also a typical example. This is also a typical example. Have you seen? It has a very small shadow. Let's zoom it well. It has a very small shadow. Have you seen it? Have you seen it? That is it. Very small candle. And guess what happened? Market pump from coming. I'm trying to get I'm trying. Market pump from $177 to where? You see? Pump to $217. It's all about patience. If you don't have patience, you will not be able to trade. You will not be able to trade. I don't want to keep you guys waiting, and I'll try to explain other candlesticks. Okay, I'll try to explain other candlesticks in our next tutorial. So if you have any question, you can drop it on the comment section. I'm going there now. I haven't seen any question. Okay, I haven't seen any question, so we are going to end our class now. So thank you guys for joining, and I'm going to drop the trading Bible. Okay, the trading Bible for you guys in case anyone is interested. Okay, so in case anyone is interested, so thank you guys for joining. I really appreciate your time. Thank you very much. Have a nice day. Bye.